Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, with all the talk of increasing listing counts, one of our listeners asked if people in Metro Vancouver want to get their whole home sold by putting it on the market at the right price, they should use the latest BC assessment for their property based on July 2017 prices as a guide. Is that a good idea?
This is probably actually a really timely question, especially if this particular person has a single detached home in the Greater Vancouver area or the Greater Toronto area here of Ontario. The assessment prices, Jim, generally speaking, about 90% of all the assessed non-condo units. So condominium units are a little bit different, but anything that's not a condominium unit, so a townhome, a single detached, semi-detached, those type of homes, the property assessments, generally speaking, about 90% of the time are wrong. Now, the degree of the wrongness increases with the difference that your own home has versus the norm. What I mean to say by that is that the average home that they're basing these assessments on, the vast majority homes are in far worse repair than the average home is. And then there's a smaller segment that is in better repair than what the average home is. Now you're saying average, Ross. Well, that doesn't make sense what you're saying. I guess what I should say is that it's about the 80th percentile home is what they're measuring. So,
Ross, you've pointed out what sells is if you have 10 homes on the block, the one that's going to sell, if only 10% of them sell, will be the house that's in the best condition with the newest appliances, the nicest yard, and the new roof, right?
Exactly. And if you're going to sell your home, so this advice is only for sellers, Jim. Only for sellers. Okay? Buyers, don't listen. You can listen to what I'm going to say right now. Just remember this is the strategy that they're using against you. The seller should only be looking at properties that are homes similar to their own that are currently listed for sale. They should not look at selling prices, which is what the real estate agents and the appraisers will tell them. They should not look at properties that were for sale that didn't sell. They should only be looking at the competition that they're against today. That is the only thing a seller should look at. They should look at homes in their community that are similar to their own. And they should decide where their home ranks against those other properties. If your home ranks as the best home, then you literally should be asking the highest price. If your home ranks in the bottom 50%, then you probably should be asking the lowest price. You shouldn't be going with your assessment, though, and you shouldn't be going with what other homes have sold for. As a seller, you have to look at this from the buyer's mind. A home buyer goes out and starts looking in the marketplace. The home buyer, over time, will select one or two or three neighborhoods that they want to move into. They will then look at the housing stock that's available in that their number one market, their prime market, their secondary market, and their tertiary market. The buyer will look at all three of those. If a home comes up in the tertiary market that is extremely well priced, they may choose that home. But the preponderance, the overwhelming desire of that home buyer is to buy in their primary market. So you need to be only focusing on those buyers. If those buyers are looking in your marketplace for your price category of home, where does your home rank? If your home isn't the best home, then you need to make a price adjustment on that property. What I'll tell your listeners is that the assessment that back from 2017, that no longer applies any longer. First of all, it didn't apply in 2017 in July 1st because the methodology that they use doesn't arrive at a July 1st price. It's an aggregate over the last few months, and then they also look at the trends of the homes that have sold earlier. This person, the person who posed this question, what they should be looking at is only the other homes that are for sale in the marketplace where their own home is located. Similar homes to only their home. What are those homes listed for sale? In order to get the most amount of money for your home, those are the only homes you should be looking at. I can assure everyone that's listening to the show who's thinking about selling a home right now, if you have the best home and you are paying $1 total commission, your home will still sell. Don't listen to the real estate agents. Oh, we've got to make sure that we're offering a generous enough buyer broker commission so the buyers want to sell your property. That is not the way it works. Buyers search on MLS.ca and maybe one or two local websites. The buyers pick the homes they want to look at. When the buyer goes through the home, the buyer is always, and I mean always, Jim, going to select the number one ranked home that they can afford to buy.
Well, Ross, I just went through a home buying experience, looked at 10 places, and the one that I bought was the one that I fell in love with the second I walked in the door.
There you go.
The others, there was always something I didn't like.
Right. So that home was ranked number one to you.
Yep.
And you were able to buy it at a price, obviously, that you felt comfortable with because you bought it.
Exactly. So that's, the key thing is don't just buy a place because, well, we can afford it and I guess you'll be miserable.
Exactly.
Find the place you like, the place you love, and you'll be happy. We'll have more with Ross Kay right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
Welcome back. We're speaking with Ross Kay. Ross, there's been some talk about using an inheritance tax as a way of helping with wealth inequality. Since your home is generally Canadians' largest source of wealth, what are your thoughts on inheritance taxes? And I'll just tell a little tale from London where a cousin's parents had a very, very nice detached home in a very nice suburb. But because of their tax laws, he had to sell that very nice home, and he lives in a tiny apartment.
Yeah, and it's another great question, because we're hearing a lot of that right now, especially with the socialistic commentary that's coming out from a lot of different areas right now. You're seeing even a lot of it down in the States.
Well, you have 1% of the world's people owning 2/3 of the world's wealth, so you can understand the conversation.
I can understand it, except, Jim, that I also look at it a different way, because I understand that.
But most Canadians are not in that category.
Right.
99% are not like that.
If you own a home, you are. And that is the simple truth. 70% of the world's wealth is tied up in residential real estate. that residential real estate is owned by regular people. Now, if they don't want to approach it as an asset class, that's their own choice. That is the mistake that generation after generation has made. That's not the mistake that we make, and that's not the way that we look at it. Your home is basically a break-even proposition. When you look at your home, say for the sake of the argument, a single detached home, you are going to pay enough interest on the mortgage debt over the course of that you owned it, enough in renovations, maintenance, and repairs over the course of the length of time that you've owned it, and you're going to have inflation is going to eat away at some of your equity as well. The best case scenario for anyone through home ownership is that by the time they're done liquidating their real estate 30 years from now, they'll break even. All of the expenses paid for that home are in after-tax dollars. Your mortgage that you pay is after-tax dollars. When you put a new roof on, that is after-tax dollars. They're generally speaking, I mean, the odd time a government will give a little incentive to put a new furnace in a house or something like that. But generally, every single cent that is spent on the home is after-tax dollars. It wouldn't make sense for you to go to the cost of owning a home, taking care of it for 30 years, paying all that mortgage interest in after-tax dollars if the government was going to tax you again when you're just trying to get your money back out of it again. And that's where the problem with this inheritance tax. Right now, it's arguably, Jim, there's $240 billion in Canadians in offshore bank accounts. We just heard Jeannie Bouchard, for the sake of the argument, the tennis player from Quebec, has decided that she's going to move to Bahamas. Instead of worrying about going after the regular Canadian who has lived in a house for 40 years and they want to pass on that house to their children, go after the $240 billion in offshore money. Go after Bill Morneau, who set up his corporation in Alberta to bypass taxes. That's where we should be talking about, and that's what we should be going after. I really believe what the elites are doing, Jim, in these situations is they're trying to set the regular person against the regular person. And I'm watching that in housing happening every day. I watch the millennials be beaten down by false myths, stories. We've been talking about them on the show here for over 2 years, and pitting millennials against boomers. No one can tell me that is not a concerted effort by I'm going to use the term elite, the elite of our society, to get regular working class people to go against each other. We should be looking at $240 billion of offshore money, because that money is solely held by the top 1% of our population. And when you discussed it, Jim, earlier, when you started this conversation, and you brought that point up, you're 100% right. But let's not go after the family home. When we're talking inheritance taxes, if they want to put a threshold of over $3 or $5 million, I have no problem with that. But when you start, and that would have to be indexed to inflation, by the way, as well. But if they're going to bring it up about just regular people, the family who purchased a house in downtown Vancouver 40 years ago, they've hit the jackpot. You know, they're lucky. That house is now worth $1.8 million. There is no way that they should have to pay an inheritance tax on that property when the builders who are building the high-rise condos have their money offshore, located in some tax haven, so you can't tax them. Let's go after the money of that top 1%. That top 1% is not home ownership wealth, which is going to be inherited by the next generation. You can choose to put your money wherever you want to put it. If you want to put it in the stock market, so be it. If you want to put it in your home, so be it. If it's in Canada, it's been taxed one way or the other. If it's outside of Canada, probably it hasn't been taxed at all.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, last week the president of the Toronto Real Estate Board said home buyers who'd been sitting on the sidelines had begun to buy again and that prices were up versus last August. I believe the number they used was they were up 8%. How is that what you saw that went down in Toronto in August?
Yeah, no, that's not what we see in August. And not only is it not what we see, Jim, that is not what I'm going to just state black and white. That is not what happened. The president of the real estate board in Greater Vancouver area in Toronto should be charged by the provincial regulator for misleading the public, because that's exactly what he did. When they use this, buyers have moved to the sidelines, buyers have moved back off the sidelines. Where's the metric, guys? Where is the metric for the real estate board or the president of the real estate board where he can cite it? It's not. It's just something, it's a figment of his imagination. It's a guess. He doesn't have a metric that calculates buyers on the sideline. Now, the reason I know that is because the only place in Canada where that metric exists is my firm, with the metric that we call days of demand. Now, it is a highly complicated metric to come up with. It is one that has never, ever been even talked about by organized real estate. But what it does for us is, because we actually own it, we also know the prices dropped in August. Because we know that in August, because of the way the buyers that were buying in that month were more heavily weighted towards executive and luxury class homes in the Greater Toronto area. There is a market reason why that happened. It wasn't a fluke. It wasn't that they went out and started buying. There is an actual reason in the market why we knew that was going to happen. But what it did is it created a false illusion of house price, Jim. All over the GTA, Jim. All over the GTA. Anybody other than a condominium, if you were paying the same price that you would have paid for the house last year, it doesn't, I'm sorry, folks. It doesn't make any sense. We have people who are watching monthly tens of thousands of dollars being added into their net wealth because they're not buying right now. We are watching the identical home, Jim, drop in price month after month after month and continuing to drop. They have not stabilized. The prices did not go up. Buyers did not move from the sidelines. If that was the truth, show us the numbers, people. If that really truly happened, ask the president of the real estate board, the local real estate board marketing director, an economist at a Canadian bank, an academic at a university. Ask one of them for the metric, the proof, the data proof that happened. None exists because it didn't happen. And that's really what the story was out of Toronto in August, Jim.
Well, today we have, Ross, the president of the Vancouver Real Estate Board claiming the market was, quote, calmer in August. In the last couple of months, we've also heard words like stabilized. And now they're using calmer. Now, what do those words really mean?
They mean that they're trying to continue to fool the public, Jim. when they came up with the stabilized term, that was it. One of the bank economists started saying the market is stabilizing. Go out and try to find a definition in economics textbook about the housing market that defines what a stabilizing market is. It does not exist. Google it. It doesn't exist. It's BS. The real estate board today claiming the market was calmer in August. Why didn't you just say the market has collapsed? 30% drop in sales. Housing prices across the greater Vancouver area are plummeting. The average reduction in a price in the greater Vancouver is over $100,000 in September already. The market in the greater Vancouver is unraveling so perfectly, Jim. It is so perfect when we look at the data, how it's unraveling. Now, the data is worthless if you don't know how to read it. We know how to read it. When we read it the way the market functions, it is perfection right now. It took Calgary over a year to reach this point of perfection. Greater Vancouver, it is functioning perfectly. We have an equity transfer now flowing from Vancouver to the suburbs, and which was just the opposite during all of the run-up for house prices. The reason that you measure a housing market, right back to the first question you asked me today, Jim, about how do you price a house? You have to know how the housing market is functioning in your specific neighborhood for your specific style of home, depending on where your home ranks between 1 and 10. Is it the first home? Is it the last best home? All of those things work perfectly with one another. There is no confusion. It happens the same decade after decade after decade. The 26% house price correction we warned your readers about in the fall of 2016 is now being recorded in the data. There are already houses that are 40% off, houses that are selling for 40% less than what they sold at the market peak in the greater Vancouver area. Everything works perfectly. It wasn't a calmer market. Calmer is to make everybody think everything's rosy and everything's okay. Go out and buy a house from a Royal Real Estate Board of Greater Vancouver member this fall so they can make commissions. That is not what's going on. You are in a correcting housing market. There is nothing wrong with owning a home in a correcting housing market as long as you are a rational homeowner. You have planned for it accordingly. But it would be foolish for a first-time buyer to enter the market right now. It would be foolish. It would be foolish for someone to trade up for a far more expensive home. That would be foolish. There are opportunities in every market, depending on the type of home you're looking at, depending on the type of home you're looking to trade from your existing home to the next, up or down the property ladder. There is always opportunities. All you need to do is get the information that tells you how the housing market is functioning at this moment in time, what the trend lines are for the two types of properties you're talking about, one selling, one buying, and then make a rational decision. Jim, there are lots of people who have had great opportunities. They've sold their house to a builder developer. They've gone out and purchased another home. It doesn't matter what happens to the market for them, Jim, because the market goes up and down like a cork in a bucket of water. If all the corks go up and down. So it's not even relevant about a housing market correction to them. What is relevant is if you're entering the market or you're trading one category of home for another, moving up or down to the property ladder, or you're getting out of the market. But that's no different today than it is every single day of the week, every month of the year, every year of the century.
Ross, there was a survey here. I just want to ask you a question about this.
Yeah.
It found that renters in Vancouver and Greater Toronto as well, they are thinking about moving out of the metro areas because they find the rents unaffordable. And I know in BC, they're allowed now to have almost a 5% rent hike this year.
Yep. Yeah, but Jim, that's normal. That is the same that it has been for the last 40 years. People move out into the suburbs. So in Greater Vancouver area, maybe if you want to own a home, if your goal is to own a home, maybe you've got to move out to Abbotsford to start. Maybe you've got to move out to Kelowna. If your job is not paying you enough to make that commute, then maybe you've got to make a lifestyle choice. What I hope what your listeners take from all of the shows that we do together, Jim, is this one thing. Your home ownership cost, the cave that you live in, just like the caveman, the vast majority of your resources are going to go towards preserving that cave. You're going to find the cave. You're going to take care of the cave. You're going to paint paintings on the wall of the cave, which decades later, maybe your kids will look at and they'll think it's antique art. That has never changed from the moment the first caveman went into a cave. It hasn't changed. It's exactly the same today. The vast majority of your expenses in life are going to be focused on putting a roof over your head. You really do have to make choices. Now, it may seem like they're a little more urgent today than it was 20 years or 30 years ago. That may be true. But the choices are still the same. And you have to, if you do not sit down and rationally design a plan for you and your family about the cost of the roof over your head, then you are always going to have a constrained life. What I hope we do in this show, Jim, is we give some information to people to be able to go out and make an informed decision. Don't listen to real estate agents. Don't listen to banks. Don't listen to academics, because unless they have the data to prove it 100%, they're just telling you a story.
Ross, thank you so much for chatting with us.
Thanks, Jim.
My guest has been home ownership consultant Ross Cave from thewealthyhomeowner.ca. If you have any questions for the show or Ross, you can send them to info@housestreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.